Internal Revenue Service IRS tax news. IRS suspends requirement to repay excess advance payments of the 2020 premium tax credit. Those claiming net premium tax credit must file Form 89628962. IR 2021-84, April 9th, 2021, Washington. The American Rescue Plan Act of 2021 suspends the requirement that taxpayers increase their tax liability by all or a portion of their excess advance payments of the premium tax credit. There's a link to the premium tax credit here, excess APTC, for tax year 2020. A taxpayer's excess APTC is the amount by which the taxpayer's advance payments of the premium tax credit, the APTC, exceed his or her premium tax credit, the PTC. The Internal Revenue Service announced today that taxpayers with an excess APTC for 2020 are not required to file Form 8962 Premium Tax Credit or report an excess advance premium tax credit repayment on the 2020 Form 1040 or Form 1040 SR Schedule 2 Line 2 when they file. Eligible taxpayers may claim a PTC for health insurance coverage in a qualified health plan purchased through a health insurance marketplace. Taxpayers use Form 8962 Premium Tax Credit, there's a link to that here, to figure the amount of their PTC and reconcile it with the APTC. This computation lets taxpayers know whether they must increase their tax liability by all or a portion of their excess APTC, called an excess advance premium tax credit repayment, or may claim a net PTC. Taxpayers can check with their tax professionals or use tax software to figure the amount of allowable PTC and reconcile it with APTC received using the information from Form 1095A Health Insurance Marketplace Statement. So this all sounds quite confusing because it is, but let's see if we can kind of recap what's going on here so we can fit this into the full picture. So this is just basically my overview of where this basically fits in. We're talking about the health insurance marketplace. If you're part of the health insurance marketplace, you may have an available credit related to the health insurance based on certain conditions. When you sign up for the health insurance, then what they try to do is pre-calculate what the credit will be, and then possibly lower the premiums by the amount of the credit that you would potentially get, although the credit would not be received till the end of the year. So it's kind of similar if you've been following along with these economic impact payments, where we said the economic impact payment is basically a prepayment, that you need the recovery rebate credit is actually a prepayment, or the economic impact payment is a prepayment of the recovery rebate credit. And then when you file the tax return, you determine or figure out if there's any kind of discrepancies. You have a similar situation here in that by lowering the premiums on the insurance plan, it's because of a credit that would be on the tax return. So for example, you might have had lower premiums in the 2020 when you're paying for the health insurance premiums, but then there's a credit on the 2020 tax return, which is the reason there was the lowering of the premium there, and it would be reported on Form 1095A. Now, if you have a situation where something was wrong, where they basically lowered the premiums too much, and then when you actually filed the tax return, it was like you don't really qualify for that much of a lowering, then you could end up with problems at the end of the year, possibly owing taxes due to a situation like that, which is quite common and could easily happen given the fact that, again, we don't really know what the taxes are till we file the tax returns, because the taxes are quite complex and they change from year to year, especially over the last few years. So the prepayment or the lowering of the insurance with regards to a guess about what the credit will be when you don't know can be a little bit risky and a little bit complicated. So that's kind of the overview of where this stuff is fitting in. So this thing would be reported on Form 1095A, which is what you would be receiving at year end to help you prepare your taxes. I would recommend, if you have a 1095A, that you do this basically through tax software if you have the ability to do so, or with a tax professional There are links to the software, free software, on irs.gov website. If you are under a certain threshold, the software can really help you to go through kind of an interview process to get an idea of what is going on here. So between the software, the instructions on the IRS website, and just a general understanding of what's happening, then you kind of put this together. But it is complex because it's Again, they're trying to basically figure out a credit that's going to be based on all these different conditions for your tax return to be completed, including your adjusted gross income and whatnot, lower and basically give you that credit in advance by lowering the amount of the health insurance premiums, and then hopefully everything will reconcile out at the end of the year. But that's complicated because you don't know exactly how much the credit would be until you actually do the taxes. So it's all kind of a guess until the end of the year. Okay, so the process remains unchanged for taxpayers claiming a net PTC for 2020. They must file Form 8962 when they file their 2020 tax return. See the instructions for Form 8962. There's a link to that here for more information. Taxpayers claiming a net PTC should respond to an IRS notice asking for more information to finish processing their tax return. Taxpayers who have already filed their 2020 tax return and who have excess APTC for 2020 do not need to file an amended tax return or contact the IRS. The IRS will reduce the excess APTC repayment amount to zero with no further action needed by the taxpayer. So they're basically making this adjustment kind of late again. So if you already filed the tax returns under the process or rule before this point in time, then the question is, do I need to amend my tax return now so that I can pick up that benefit? Amending the tax return can be quite burdensome oftentimes. The IRS, this is my interpretation of what they're doing here. They're saying, hey, we're going to go ahead and make that change for you on our end, given the fact that, you know, you didn't know about this, you did it correct when you put it together. So hopefully they'll be able to pick it up on their side, make the proper adjustments, and if a refund would be applicable, pay out the refund or apply the refund appropriately at that point. So the IRS will reimburse people who have already repaid any excess advance premium tax credit on their 2020 tax return. Taxpayers who received a letter about a missing Form 8962 should disregard the letter if they have excess APTC for 2020. The IRS will process tax returns without Form 8962 for tax year 2020 by reducing the excise advance premium tax credit repayment amount to zero. Again, IRS is taking steps to reimburse people who filed Form 8962, reported, and paid an excess advance premium tax credit repayment amount with their 2020 tax return before the recent legislation changes were made. Taxpayers in this situation should not file an amended return solely to get a refund with this amount. So they're basically saying, hey, we made this change late. You don't need to file a refund. We're going to basically take care of it on our end, hopefully, and then send out the difference for it. So you want to be aware of it, have it on your radar. But the IRS is basically saying that you don't need to take action at this time if you filed the tax return and didn't take this into consideration. The IRS will provide more details on irs.gov. There is no need to file an amended tax return or contact the IRS. As a reminder, this change applies only to reconciling tax year 2020 APTC. Taxpayers who received the benefit of APTC prior to 2020 must file Form 8962 to reconcile their APTC and PTC for the pre-2020 year when they file their federal income tax return, even if they otherwise are not required to file a tax return for that year. The IRS continues to process prior year tax returns and correspond for missing information. If the IRS sends a letter about a 2019 Form 8962, we need more information from the taxpayer to finish processing their return. So they're basically saying, hey, this applies to 2020. You may have got a letter that you could possibly went out before this change happened for 2020, but if you're getting letters for 2019, then you want to get back to those letters and provide the information that the IRS needs regarding them. So taxpayers should respond to the letter so that the IRS can finish processing the tax return and, if possible, issue any refund the taxpayer may be due. So you can see the Form 8962 premium tax credit. There's a link to that here for those instructions and the form. And Fact Sheet 2021-08, more details about changes for taxpayers who received advance payments of the 2020 premium tax credit. There's a link to that here, and there'll be a link to this in the description.